Will the Federal Reserve cut interest rates again next week? That's the big question. Its preferred inflation gauge, the core PCE index, just came in. It shows inflation cooled to 2.8% year over year in September. Now, separately, a report from the University of Michigan shows consumer sentiment, that's how people feel about their finances, the economy, that actually improved in early December, beating expectations. Let's bring in Jeffrey Small, partner at Retirement Income Sources. Jeffrey, good to have you back. So the Federal Reserve's favorite inflation gauge showing modest cooling. Overall, inflation is stable. So based on this data, do you think the Fed will have room to cut interest rates next week?
Well, it was a good report because inflation cooled, 0.1% month over month, and it is heading in the right direction, but it's still above the benchmark goal of 2% the Fed really wanted to, as a goal to achieve on inflation. And I don't think that's realistic because the economy is growing. As you saw, the consumer sentiment, as you just stated, is actually accelerating. And so the chances have definitely increased, though, with today's inflationary report for, a slight cooling in core inflation gives the Fed a little bit more room to consider a rate cut. But as you know, it's not a sure bet.
Right. I mean, a lot of people are expecting to see a cut next week, but we'll see. Nothing is written in stone yet, but we did see the initial jobless claims fell to the lowest in over 3 years yesterday, according to the Labor Department. And then you have that consumer sentiment improving in December. What do you attribute that to?
Well, I think, 60% of the growth in GDP right now is attributed to the artificial intelligence and the reinvesting that's occurring by, hundreds of billions of dollars. And so those are obviously influencing the metrics here and the numbers. But the government was shut down. And so we don't have all of the real hard data over the last 6 to 7 weeks. It's suboptimal perspective visually on some of these numbers. And so I have a feeling the Fed is going to punt on lowering rates until January because of that suboptimal perspective as far as the transparency of the economy goes and the real numbers. And so, for the last 3 years, Jerome Powell has been the Grinch at Christmas time, and he's ruined the Christmas tree, the Christmas rally, the Santa Claus rallies. And I suspect he's going to do that again this year. So look for the Fed not to cut rates, despite Fed funds rate saying there's an 85% chance of a rate cut on December 10th.
Wow. Okay. You're in the minority opinion. If they do punt and they don't cut next week and they cut, say, in January, might that be the last cut we see for a while?
It could be, but the Fed is so data dependent, they have no ability to look beyond the data. And that's where they're mismanaging the monetary policy of our country. And things could slow down so much that they might have to take emergency action, but then it takes several months for that rate discount to trickle through. And so I just wish they would get off the being so data dependent and so stuck on those numbers because, what's the difference between 2.8 and 2%? Not very much, to be honest with you. It's costing American consumers much more than that inflationary gap that they keep harping on as their ultimate reason for not lowering rates.
Very interesting. Good insight, Jeffrey Small, partner of Retirement Income Sources. Appreciate your time today.
Thank you.
For all our viewers asking where One America News is heading in the future, we would like to introduce you to OAN Live. OAN Live is the best way to stay up to date on all of the hard-hitting, straight-shooting, national and international headlines. And the best part is, OAN Live is only $4.99 per month. All the credible, honest, unbiased reporting One America News offers at a fraction of the cost of cable. Just go to OANN.com to easily sign up for OAN Live and stay informed.